What's good, everybody? Happy Wednesday. Welcome to the closing beat for Wednesday, August 8th. Just a heads up, if you are one of our customers, we now have the real estate investment trust portfolio up and running. You can go to our website, click on portfolios. It's the third one down. You'll be able to see the performance, see if that's something that may fit what you're looking for. If you're not one of our customers, we are one of the only advisors. First of all, we manage our own funds. And therefore, since we're not choosing mutual funds for you, no expense ratios on those funds. We wouldn't charge you for that. So you're free to choose from those funds as much as you like to find something that fits your goals. And of course, we're adding to them little by little as we get them approved. So we just got our real estate investment trust fund posted up there with all the performance so you can see if you work with Jazz, what do you get? What are we going to do for you? So check us out at jazzwealth.com. Today, this closing beat, if you're watching for the first time, the goal is just to give you an update of the markets. What happened? Should you be scared? Should you be excited? Did nothing happen at all? We go over the good, the bad, and the ugly. So we'll dive into it. Off here to the, whatever your stage left or right or whatever it is, you can see the stock market performance. We've got the Dow, the S&P, the Nasdaq. The Dow was lower by 45. The S&P was basically flat. The Nasdaq added 4. And then at the very bottom, you see the overall, how'd the market do for the day? So you can see a slow trend higher, a little sell-off into the close. And as we go into after hours, which we'll do a video on soon, you can see that the stock market is even lower after hours. So a continued little pullback there. Let's go over to the charts to take a look. Here's the Dow on the screen. Of course, you expect any kind of a pullback. That'd be totally normal. I would not freak out at all if this even came back towards 25,000. The question would be, how fast does it do it? If it does it nice and slow and just takes a little break, then you really have no problems at all. If it's rather rapid and we see a sharp decline that, obviously there's some scary days in there, that would be that would change my opinion just a little bit. But overall, I maintain the same assumptions here. You've got the volume, the trading volume, which you can see down at the bottom there, very light and will continue to get that way. There's going to be a slowdown in the amount of trading that happens throughout the next couple weeks, and that's just because we're coming to the end of the summer. Totally normal. We are now pretty much past earnings season. Over 90% of the companies have reported, so there's not a lot to go on. If you're a trader that's trying to make a big decision, you're not going to have that in the next couple weeks unless Trump says something maybe he shouldn't say. Interestingly enough, there was a business conference and he had the opportunity to comment about China and he kept quiet. So I don't know what drugs he was on or how much he was drinking. He says he doesn't drink, but that was weird, the fact that he didn't say anything. He took the opportunity to keep his mouth shut. I'm one of those guys, in case you haven't noticed, if a politician or a company, a mutual fund, whatever, if they do the right thing and something is good, I'll give them credit for it. If a politician or somebody else doesn't do something, in the right way, or they're kind of trying to pull a fast one on you, I don't care if they're Republican, Democrat, or from another country, I'm going to give them a hard time. So I give him a little credit for that. Kept his mouth shut. That was rare. Anyway, so the Dow today a little bit lower. Not really a big deal. The S&P today just slightly lower as well. Look, it's been up for 4 days straight. You had a great run. Very normal for it to take a break. I'm very much okay with that. Today is what's referred to as a snoozer. The markets didn't do anything. Today it was very, very quiet. And to be perfectly honest with you, at lunchtime, I went home and jumped in the pool. I took a little bit of a break. It was awesome, by the way. But, it was just one of those days where if you had to walk away, you weren't going to miss much, if anything at all. And then the Nasdaq 100, that one added about 4 on the day. We'll call that about flat as well. Nothing new there. The S&P 500 is now within a half a point of hitting the all-time highs. Doesn't look like that's going to happen this week, at least as of now, and based on what's happening after hours here. And the Nasdaq is within 1%. I would think that one would have the greater probability of hitting a new high before the S&P, given what some of the energy companies are doing in that S&P, but we'll go over that as well. Let's go through a couple other things. Gold today, just slightly higher. It remains right around that 1,200 number. Buyers really have, again, nothing to push them into gold at the moment. You got all kinds of trade things going on. You got the dollar moving around. There's just no exciting reason for someone to dive into gold. So that was fairly quiet and still is. Bonds took a little bit of a hit today. Not too big of a deal. The biggest deal that will be in the news is the price of oil, down 3.5% today. So that was a big focus here. What you have going on, the China trade war. China came out today and they said that they were going to officially match the tariffs. They were going to do 25% on $16 billion worth of goods. And so that hurt the price of oil, of course. The only thing, the reason it didn't hurt the markets too bad is we already knew, right? They already hinted at this. They just made it official. We're officially, this is a trade war, by the way. They won't say it, but we're officially just fighting back and forth. And so that hurt the price of oil. A couple other things. The crude oil inventories came out. They come out every Wednesday. We were expecting to see a reduction in the amount of barrels that we have in storage here in the U.S. in Oklahoma. We saw a reduction, but not as much as everybody was hoping, which means supply was still a little bit higher than expected. I hope that didn't confuse you, but so that also hurt the price of oil. Then China also came out and said that we're importing less oil. Could that be a sign that the Chinese economy is weakening more than it already is? We'll see, but that hurt the price of oil as well. Given that the day was fairly flat, if you follow the volatility index, that's a bad chart actually. Let's try to use this one. If you follow the volatility index, it has made new lows. Basically, the saying is when the markets are relaxed, they're trending higher slowly, volatility trends lower. Volatility is just fear. Just think of it as fear. How scared are people? Since February, we had a lot. You could see a spike in how scared people were, but since then, it's been just drifting lower. So because the markets didn't do a whole lot today, volatility was actually pretty lower as well. I'll take a second and explain earnings. So earnings season is basically over at this point. 90+% of the companies have reported. There's a lot of retail names left, and so that'll kind of be the excitement for the rest of earnings season. A couple other random names as well. And so here's how we basically ended up. You have 90% of the companies reporting. Almost 80% of them reported better than expected results, earnings per share, so that was good. Even if you back out the buybacks, right? If you were to do that math. So still doing good there. And earnings growth is holding steady at 24%. Wall Street said just about 21% is what they wanted. Sorry, 20.1% is what they were expecting out of companies. They were able to do 24%. And so, hey, good news, right? So let's go back to the charts here. We'll take a look. In the Dow, your worst performer was Disney. Disney reported earnings, and I think this is a healthy move for Disney. It got a little too far, too fast. They actually missed on earnings, missed on revenue, lost subscribers at ESPN. They were fighting that battle with Comcast to buy out Fox. So I think investors gave them sort of a break on this one, only 2.2% down on earnings and earnings miss there. So that stock was lower. I think that's very healthy for the stock to pull back a little bit. Caterpillar was lower, 1.8%. They're like the poster child for the trade war. If trade seems to be going good, they do better. If trade is going bad, they do worse. And so this chart here, if you look back over the last few months, right here, just this little beginning, this is a perfect plot of how the China trade war thing has been going. A little good news, a little bad news, a little good news, a little bad news with no ultimate resolution. We have no resolution at the moment, and so this stock is hanging in there, essentially plotting how people feel about trade day by day. It's kind of interesting to look at it that way. So that's what's going on there. Boeing was also a weak one in the Dow today. Also part of the trade news, but they're way behind, guys. Their 737 is by far their most profitable plane, and they just can't crank them out. They're running behind, not only in this department, but also in the military department. There's a big backlog there. If you're Airbus, here's your chance to kind of sneak in there. Orders are higher. Everybody wants to buy planes from JetBlue, Southwest, and transport companies. And Boeing's like, we can't keep up. We're way behind already. And so Boeing suffering a little bit there. On the on the upside, you got McDonald's pushing a little bit higher today. Remember, they're starting to convert a lot of their stores over to kiosks where you order your whatever you buy at McDonald's from a kiosk. They're fighting the argument of, hey, you're replacing employees with machines. McDonald's claims, no, by adding more machines, we have to add more employees. So there'll actually be more employees at the store. How's that work? Pfizer pushing the new highs again today. This one continues to be on fire, ridiculously on fire. Normally a slow mover, by the way. And American Express, also one of the better performers in the Dow today. All right, we'll go over to the S&P. What do I cover? As far as earnings go, before we do that, Michael Kors breaking out to new highs. If you're a technical trader, you like this breakout. The only thing that could have made it better today was if it actually closed up at highs. This one sort of flirted with the breakout area. If you're a technical trader, it's like, I don't know. That was okay. I'm not going to go telling all my friends to buy it. You know, it's like it didn't really break out the way it should. They reported earnings. Everything was good. Company's doing great. They're good, obviously a high-end retailer. Doing well, and prices, of course, pushing out to new highs today, but I would have liked to see it close a little higher. CVS up about 4%. They said their merger with with Aetna is almost done there, and the American Medical Association came out today begging for them not to do this. They say it's going to mean higher prices. Flat out, across the board, is going to mean higher prices. And what did we say last week? We were pointing out the earnings of these health insurance companies. They're all citing higher premiums as the driving factor behind them growing. So it's one of those things that keeps coming up little by little. Hey, these guys are raising their premiums. They have a larger than expected profit. I'm not saying it's the wrong thing to do. I mean, they're in business to make a profit, and clearly they are making a good profit there. So we'll see what happens with them. Match.com. So it's a public company. So they came out with earnings today, 17.28% gain on the day. Huge, huge day for them. The volume down here, if you look at the bottom, see that volume? Much, much higher than average, about 10 times higher than average, to be honest. And basically they said they've got more paying subscribers than they know what to do with. They're adding thousands of new paying customers to Match.com and Tinder. So you guys out there swiping left and right, apparently they're making money off of you, and they're happy to have you. So keep swiping. That will push the stock higher for sure. Avis/Budget, that stock was down 15% on the day. They earnings came in exactly what Wall Street was expecting. Always nice to beat expectations a little bit. They came in exactly at what they were expecting, but the company said going forward, probably not going to do as well as Wall Street's hoping. And they also said we're going to add another $250 million to their share buyback program. So here's yet another company adding more money. They're buying their own shares back. So going into next quarter, when we see earnings per share, we got to make sure to factor that in, right? Because that could be a little bit misleading. Just saying. Amazon up 1.29% today. Just trended higher. Just a nice trending stock at the moment. Newark, if you live in Newark, New Jersey, by the way, they offered Amazon a $1 billion deal to move their second headquarters to Newark. $1 billion. Does Newark have $1 billion to just be sort of giving them in tax breaks? Do they now? I was just there. It doesn't seem like they got a lot of money. So then you have Yelp. Yelp reported earnings after the close here. Earnings and revenue beat expectations. They did really, really well. Their advertising revenue supposedly is much higher. At least that's what they reported. And I don't blame them. Quarter after quarter, these people call businesses. They're so good. Their marketing department calls companies and asks them to sort of advertise nationally and stuff. They're giving away great deals. I'd be interested to see what is their overall profit on the advertising revenue they're bringing in. According to them, it's just fine at the moment. So nothing to worry about there, I guess. So Yelp is higher, I believe 5%, 42. Well, now it's up at 42, almost back to the 200-day moving average after hours here. So it closed at 38.16. Now it's trading at 42.18 or whatever I just said. In the S&P, your worst performers today, energy. Energy got crushed. All the big name energy stocks and all the little ones as well. Look at the charts here. You got Cimarex down lower. Well, basically, I could just go through the list of the biggest losers in the S&P 500. And aside from just a couple other ones like Cardinal Healthcare and things like that, they're all energy companies. You got Marathon Oil lower on the day. Just tons of them. Some that I haven't looked at in forever, to be honest. So those were your bigger losers in the S&P 500. On the way up, Michael Kors, we talked about it already. That was your best performer. CVS was your third best performer. And then the healthcare stocks, biotech stocks, anything related to that biotech space doing well. And then, of course, Take-Two Interactive had a nice day, about 2.25%. Can't blame that. I still see Kroger in there pushing higher. We pointed that out about a week and a half ago as one of those stocks that's holding its own, showing strength when people are looking for a place to put money. They look for discounts and they look for strength. They don't look for those stocks that aren't doing anything. So that one continues to do well. And Chipotle hitting new highs today, adding 2%. Not bad, Chipotle. Come on, man. You got to get your food straight. But as soon as you get that food straight, I'll be back. Kohl's, retailer, up higher by just about 2% on the day. Under Armour, about 2% on the day. So a couple retail stocks pushing higher ahead of a lot of the earnings that are coming out there. Oh, Southwest Airlines was higher by 1.25% today. Morgan Stanley hinted that Berkshire Hathaway could acquire the company. That's been said numerous times, but when Morgan Stanley speaks, people listen. And then just a couple other retail names like Ross. Ross, dress for less. I don't know if they still use that slogan, but that is that one. What else can I look at here for you today? Market-wise, pretty quiet. It was kind of a quiet day. In New York, they voted to put a cap on the number of licenses for Uber. That was just recent news. I don't really have anything else. Yelp's now higher by about 10% after hours. Jack in the Box higher by 4%. They're still getting bought out. And Zumiez, another retailer. Okay, so just a couple other things there for that one. That's basically all I have for you today. Shouldn't shares be reinstated back into the market after someone is caught insider trading? So that came out today. A Republican was busted for insider trading. That's really a silly thing there, because a lot of those guys are actually able to trade on news that they know. This was a different situation. He is in big trouble. I believe he was arrested today. As far as what they do with the shares, I believe he is forced to sell them. What happens, I mean, obviously they go back into the market when he's forced to sell them, but I believe that during the legal process, they don't do anything. They want that as proof. They leave everything as is, and then they take over from there. I'm not 100% familiar with that process. I don't want to be familiar with that process, by the way. Do you see Snap recovering following their huge funding of $250 million from the Saudi prince? So Snapchat doesn't make any money. Period. They don't make any money. You can't suggest to somebody you buy a stock that doesn't make any money. I don't know how else to say it. The Saudi prince buying $250 million, the Saudi prince actually has about a 50-50 track record of investing in companies and making a profit. Remember, $250 million for him is like lunch money. Seriously. Like, when we go to Chipotle, you spend $10, he could spend $250 million, not blink an eye. So I don't really look at him as an influential buyer in Snapchat. He's obviously hoping they become profitable and something works out there, but they just don't make any money. Go look at every stock that doesn't make money. They're operating at a loss, even though they might trade higher. If you waited until the company did start to produce a profit and you invested then, use Amazon as an example, what'd you miss? You didn't miss anything. So for me, Snapchat is just like, come on, guys. Like, they don't make any money. You see the money they spent on the New Year's Eve party? Ridiculous. You can't go doing things like that. I don't have a lot of good things to say about them. I wish them well, but I just don't see it. When does the summer slump go away and volatility kick in? Is it Labor Day, Memorial Day? Whatever that holiday is right after the summer, that's usually when things start to pick back up. I can't remember. I believe it's Labor Day. I get those two holidays mixed up all the time. And GE, let's see. I haven't looked at that one in a while. No new news on GE, just hovering near the lows. Boy, it kind of looks like Bitcoin, doesn't it? Bitcoin, I believe that one lost another, 10% lower today on Bitcoin. How you liking crypto now? Crypto, by the way, I'm a fan of it long term, to be honest. In the short term, everybody just wants to trade it. The Bitcoin has to have a use other than trading. Otherwise, it's like, what's the point, guys? So that's that one. Hello from Chicago. All right, nice. Cool. Well, hey, I'm going to wrap it up here. We will, of course, be back tomorrow with the Dow Show at 1 o'clock and then the closing beat again every day. If we helped you in some way today or you like the show, hit the subscribe button, turn the bell on. That'll let you know when we go live again. Give you a little heads up in case you're still working and you want to watch us at work. That's pretty cool. All right, guys, we'll wrap it up from there. Enjoy the rest of your day. We'll talk to you soon.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.